So yesterday we have posted two transactions in the foreign currency business transactions, right? Now, just a minute. So yesterday we have posted two business transactions in US dollars, right? Now let us display the line item from the cash account. 2,100,000 company code SSKV. Then click on execute. See, in the line items, right? The balance is displayed in the company code local currency. Even though we posted the business transactions in the foreign currency, the system is displaying the balances in the company code local currency. Why? Let us go to the cash account master record. See, we have selected only balances in local currency. That's why when we select the only balances in local currency, when we post the business transactions in the foreign currency, that is converted into company code local currency automatically. Clear, no? So when I was trying to explain this point yesterday, the server was disconnected. Now, the next topic is interest calculations. So here, in the business organizations, we have to calculate interest for different purposes. They are called interest calculation types. Here, we have the three types of interest calculations. Number one, balance interest calculation. Number two, item interest calculation. Number three, penalty interest calculation. So this balance interest calculation is used to calculate interest on the GL account balances like term loans. So why we need to calculate interest on term loans? And what is the function of the interest calculations in SAP? Here, every company will take number of term loans, right? So no company can do the business without any term loans, right? Suppose if you take India, Adani, right? If you take India, Adani Group, right? 90% of their share capital is borrowed from the banks only. It's too much extreme, right? Okay, leave that point. Normally, any company will take number of term loans, and on the term loans, they have to pay interest, okay? And these term loans are repaid in the form of installments. Say, for example, we have taken one term loan and the installment is to be paid on 1st of every month. Then, before paying the installment, we have to calculate interest on the outstanding balance of the term loan before the day of installment payment. And that interest is to be debited to interest account and it has to be credited to term loan account. So unless you do this, right, the balance of term loan in your books of accounts will not match with the balance of term loan in the bank books. And also, every installment contains two parts. Some amount towards interest, some amount towards principal. Suppose if you're paying 10,000 installment, this 10,000 installment contains some amount towards principal, some amount interest. So in this 10,000, you have to segregate the interest part, and that interest is to be charged to profit and loss account. That's why before paying the term loan installment, we have to calculate interest on the term loan account balances, right? Now, you have taken 50 term loans, and every term loan will carry different rate of interest. In that case, calculating interest on all the 50 term loans with the different rates of interest is some little bit difficult task, and also there are chances to manual mistakes. Just a bit. Yeah, sorry for the interruption. So if you have 50 term loans, on all the 50 term loans, you have to calculate interest and you have to post the accounting entries. And every term loan may carry a different rate of interest. So in that case, right, calculating interest on 50 term loans is very little bit difficult task. So SAP has developed some configuration settings, right? And the FI consultant will configure these settings in the client company. Then the end user who is responsible to calculate interest and post interest, he executes one transaction code. In that transaction code, he enters the information in 78 fields. Then the system automatically calculates interest on all the 50 term loans and it will post the accounting entries also. That is exactly the function of interest calculations. So this balance interest calculation type is used to calculate interest on GL account balances like term loans and also working capital loans. Working capital loans or overdraft accounts are same. Then we have item interest calculation. This item interest calculation is used to calculate the interest on vendor account balances and customer account balances. Sometimes what happens, customers may delay the payments. So if the customer delays the payment, as per the payment terms, we may have to charge the interest. And sometimes we may delay the payments to vendors. In that case, vendors may charge the interest. So whatever may be the case, right? In the vendor account balances, if you have to pay interest, you have to calculate interest. See, for example, vendor X. So today we purchased materials from the vendor X. Then we post the entry, inventory of raw material account data to vendor account. So because of that entry, the purchase is posted to credit side of vendor. So buy raw materials. Let us say 25,000. Then vendor said we have to make the payment in 30 days. If we make the payment after 30 days, we have to pay interest from the original due date, right? So we could not pay the invoice amount in 30 days. We have delayed 1 month. So for 1 month, let us say 1,000 is the interest. So you have paid to vendor along with interest 26,000, right? So when you pay to vendor, debit vendor account, credit bank account, right? So to bank account, 26,000. This is along with interest, right? Now, if you balance the vendor X account, credit side is 25,000, debit side is 26,000. So there is a debit balance of 1,000. In the personal account, what does debit balance imply? In the personal accounts, what is the meaning of debit balance? What happened? Sorry? In the
withdrawal.
Withdrawal. Debit a personal account will debit the receiver, sir.
Yes, that means what? I am asking, right? In the personal accounts,
Amount
debit balance means what?
He has more amount. He received more amount than what he has to receive.
Exactly, right? So what is the meaning of debit balance? If the debit is more than credit, that is called debit balance. And if the credit is more than debit, that is called credit balance, right? So in this vendor account, there is a debit balance of 1,000 rupees. What does it mean?
Means he has received more money.
He has received more money. Means vendor has received more money, right? Yes, you are true, right? So we have paid 1,000 extra. Vendor has received more money. Why?
Because he has not
he charged interest, sir.
Yeah, we have paid
interest.
1,000 rupees extra towards interest.
Yes.
Right? So This interest is an expenditure to you, and this interest is to be charged to profit and loss account, right? That's why, actually, as per this account, there is debit balance of 1,000 rupees, means we have paid 1,000 extra to the vendor, and we have to receive 1,000 from the vendor as per this account statement, right? But that is not true. You have paid 1,000 rupees extra towards the interest. That's why we have to calculate interest on this 25,000, and we have to post an accounting entry by debiting interest account and crediting vendor account. So debit interest account, credit vendor account. So by virtue of that entry, right, that is posted to credit side. By interest, ₹1,000. No balance is tallied. So like that, similarly in the case of customer also, you may have to charge the interest. So the interest receivable from the customer is a revenue. Interest paid to the vendor is an expense. So in this case, we have to calculate interest on the outstanding balance of the vendor account, and we have to post the accounting entries accordingly. So for that purpose, we have to calculate interest on vendor account balances and customer account balances, right? So in order to calculate interest on vendor account balance and customer account balances, we use the item interest calculation. Then this balance interest calculation is identified with the letter S in the system. Then this item interest calculation is identified with the letter P in the system. Then penalty interest calculation is the third one. Penalty interest calculation is identified with the letter Z, right? Then this penalty interest calculation is used to calculate interest on, to impose the penalties, means interest on interest. This penalty interest calculation is used to calculate interest on interest as a penalty. Normally, right, this is used, right, to impose the penalty on the interest payable on working capital loan. So here, at this point of time, we are in the general ledger accounting, right? Now I am going to show you how to calculate interest and how to configure for interest calculation in the general ledger accounting. Okay, this penalty interest calculation is used to calculate interest on, to impose the penalties. Means here you have to understand something regarding working capital loan. So even it is not related to SAP configuration, right? As a consultant, you are expected to know regarding the functionality of the working capital loan. So here, see, working capital means current assets minus current liabilities, right? That is called your working capital, right? So current assets include your receivables, inventories of raw materials, inventories of work in progress, finished goods, packing materials, stores and spares, revenues to be received, prepaid expenses. All these items together is called current assets. Then current liabilities. So your payables, I mean sundry creditors, right? Then incomes received in advance, then outstanding expenses. So all these items together are called current liabilities. Technically speaking, right, any asset, right, which can be realized within a short span of time is called current asset. Current liability means the liability which is matured within a short span of time is called current liabilities, right? So say for example, your current assets are 20 lakhs, right? Minus your current liabilities are 10 crores. Sorry, 20 crores. Your current assets are 20 crores. minus your current liabilities are 10 crores. Now, so your working capital is 10 crores. So what is working capital? Why do you need working capital? Say, for example, you have invested some 10 crores in your business, right? Today, you have purchased material for 5 crores, right? Then you have purchased one building for 2 crores, okay? So 5 plus 2, 7 crores are over. Now you have employed some personnel, right? And you have purchased some furniture, vehicles, etc., another 1 crore. So total 8 crores are over, right? Now, today you purchase the raw material and you have started manufacturing. Remember, you have purchased raw material of worth of 5 crores, right? Now, you have started the manufacturing process and the process will take 2 months. So till you convert this raw material of 5 crores into finished goods and till you sell them, you cannot get back the cash, right? But this month you have to pay the salaries of 3 crores. You have only a cash balance of 2 crores, but this month you have to pay salaries of 3 crores. And there are many other expenditure, rent you have to pay, plant and machinery, repairs and maintenance you have to pay. So your cash balance is only 2 crores. Are you getting my point? Then what about how to meet this expenditure now? And you don't have any cash reserves. For that, we approach the bankers. Now, I will ask the bankers, sir, I want a loan of 5 crores. Then they say, we can't give you the loan free, right? You have to give some mortgage. So what is the security you can offer? That's what the bankers will ask us. Then I say, as on today, right, I have to receive total 20 crores. My inventories are this much, right? My receivables are this much. I have to receive some revenues this much. So total current assets are 20 crores. But as on today, I have to pay some other liabilities, which are amounting to 10 crores. So my net current assets is 10 crores. So I will pledge this 10 crores to you. So give me 8 crores loan. Remember, I am pledging you 10 crores worth of net current assets, and I'm asking you 8 crores loan. Then the bankers will say, okay, I will give you 8 crores now. And suddenly, right, there was a outburst of some war between two countries, because of which the economic conditions have deteriorated like anything. So your total stock, which is worth of 8 crores, coming down to 5 crores. So if I give you a loan of 8 crores, from where I can recover the remaining 3 crores? That is the worry of the banker. That's why what the banker will say is, okay, your net current assets are 10 crores. But out of this net current assets of 10 crores, I can give you only 5 crores as a loan. The remaining amount is called margin. So the margin is kept with the bankers as a precautionary measure. Okay. So here, the bankers have sanctioned 5 crores worth of term loan, working capital loan. Now, working capital loan is 5 crores. Okay. So here, they don't give you the 5 crores at a time. They have given you permission, right, to overdraw up to 5 crores on the pledge of this 10 crores worth of net current assets. Now, here, they will give you the permission to withdraw at any point of time up to 5 crores. So, for example, today is 6/9. So 6/9/2022, you have withdrawn 1 crore. Right? Then again on 7/9/2022, you have withdrawn 50 lakhs. Then on 8/9/2022, you have received a cash shells, right, of 10 lakhs, and you have deposited that cash shells into bank 10 lakhs. Then on 9/9/2022, again you have deposited some 25 lakhs. Again on 10/9/20, these are the transactions in your bank account. Withdrawn some 5 lakhs. Like that, these are the business transactions, right? Now, in this case, you have withdrawn 1 crore on 6th. Then again, on 7th, you have withdrawn another 50 lakhs. So here, you have to pay interest to the bank on 1 crore for 1 day. Then on 7th, you have withdrawn again 50 lakhs, right? Again, you have to pay interest for 1.5 crore for 1 day. Then you have deposited 10 lakhs on 8th. So already you have withdrawn 1.5 crore, out of which you have deposited 10 lakhs. So 1.5 crore minus 10 lakhs, 1.4 crore. So you have to pay interest to the bank for 1 day on 1.4 crore. Again, 1 crore 40 lakhs minus 25 lakhs, 1.15 crore. On 1.15 crore, you have to pay interest to bank for 1 day. Then on another 1 day, right, you have to pay interest for the bank on 1.2 crore for 1 day. Like that, in the case of working capital loan, the interest is calculated daily basis. So like that, as on 30th September, you have to pay total interest of 1,50,000 to the bank. But due to some reason, you have delayed the deposit of 1.5 lakh interest to the bank. Then as per the norms of the bank, right, they charge extra 0.5% or 1% on the interest to be paid by you as a penalty. So in order to calculate the penalty interest, we use the penalty interest calculation type, which is represented as Z in the system. That is the function of working capital loan. The advantage of this working capital loan is, right, you pay interest to the bank only on the amount which you have used and only for those number of days. That's it. So here, these 3 interest calculation types, I have given the notes here, right? Now, here, first we are going to see how to configure for the balance interest calculation in the general ledger account. Define interest calculation types. SPRO. Finance accounting new, general ledger accounting new, business transactions, bank account interest calculation global settings, define interest calculation types. Click on new entries. Interest indicator is equal to KV. Use some number or name. From our company code SSKV, I have taken KV. Interest indicator is equal to KV. Name is equal to 12% interest indicator for SSKV. Name is equal to 12% interest indicator SSKV. Interest calculation type. Yes, balance interest calculation. So if you press on F4, we can see these 3 options. These are the 3 types of interest calculations, right? So interest calculation type is equal to yes. Click on save. So it says that an entry already exists in the same key, right? You have to change the name. SK. It is also there. SS. It is also there. KS. It is also there. Huh? Just give me a minute. Here, the interest calculation indicators are created at the client level. That's why we have to use the number or name, which was not already there. A, B, X, Y, Z, B1, B2, BA, BB, BC, BD. BD is not there, right? So we can use BD. Click on new entries. Interest indicator is equal to BD. Name is equal to 12% interest indicator, SSKV. Interest calculation type is equal to yes. Interest calculation type is equal to yes. Click on save. Now, write down the table name. Table name T056. T056. So what is this interest indicator? This is the identification for which we assign all values necessary for calculating the interest. This is the identification for which we assign all the values necessary for calculating the interest. The interest indicator is assigned in the terminal account master record to enable the system to calculate interest according to the value specified in it. That means in order to calculate interest, we require some information like how frequently you want to calculate interest, whether you need to calculate interest every month, every quarter, and what the rate of interest and how many number of days are to be considered every month. So all this information is required to calculate interest. So we define one identification. For that identification, in the coming steps, we assign all these values to the interest indicator. Later on, this interest indicator is assigned in the terminal account master record. So the system will calculate interest according to the values defined in the interest indicator, right? Write down this point also. The interest indicators are defined at the client level. The interest indicators are defined at the client level. Now, prepare account balance interest calculation. Transaction code OBAA or path is same as a. See, prepare account balance interest calculation, right? Table name T056S. Table name T056S. Click on new entries. Interest calculation indicator is equal to BD. Interest calculation indicator is equal to BD. Then interest calculation frequency. So how frequently you want to calculate interest, right? Every month. So then if the installment is to be paid every month, you have to calculate interest and post interest every month. If the installment is to be paid every 2 months, then we have to calculate and post the interest every 2 months. If it is the quarterly repayment, we have to calculate interest and post interest every 3 months. So how do we decide? This frequency is contained in the terminal agreement. Of course, the accounts department will tell you all this information. Right? So based on the term loan repayment schedule, right, we have to calculate interest and post interest for that interest. Here I'm taking 0.1. Interest calculation frequency is equal to 0.1. Then calendar type is equal to G. I will tell you what is the use of this calendar type. Calendar type is equal to G within brackets, Gregorian calendar. Then select balance plus interest.
Sir, will you repeat it, sir? G means?
Gregorian calendar. G-R-E-G-O. G-R-E-G-O-R-I-A-N. Gregorian calendar. Then select balance plus interest. Write down there. By selecting this checkbox, the system will display a separate line. the system will display a separate line in the interest calculation. In the interest calculation, showing the total amount of loan outstanding, showing the total amount of loan outstanding, including interest. Means it will display a separate line summary. What is the total amount of loan outstanding, including interest, as on the date of calculation of interest? If you select that checkbox, the system will display the details. I will show you those details when we calculate interest. Click on Save. Then, what is this calendar type? What is the significance of the calendar type? The calendar type determines the number of days to be considered per period for which interest is calculated. There are 4 types of calendars available for the interest calculations in SAP. See here. Four types of calendars are there. You can use any one of these calendars, right? And you cannot define your own calendar types for interest calculations. Please remember, you cannot define the own calendar types for interest calculations only, right? See, B for bank calendar, J for Japanese calendar, F for French calendar, G for Gregorian calendar. So what is the impact of each of the calendar? First one is bank calendar, which is represented with B. If you use the bank calendar, it uses 30 days as the basis for the month and 360 days as the basis for the year. That means for example, term loan amount is 1 lakh. Then rate of interest is 12%. Now, you are calculating interest every month, right? So in that case, if you bank calendar, if you use the bank calendar, right? And remember, we are calculating interest every month, okay? In that case, if you calculate interest for the month of January, system will calculate interest like this. 1 lakh into 12 by 100. 12 by 100 means, right, rate of interest into 30 divided by 360. Even though actually January contains 31 days, but the system will take only 30 days. That is the meaning of this. It uses 30 days as the basis for the month and 365 days as the basis for the year. Similarly, if you calculate interest for February, here also, right, 1 lakh into 12 by 100 into 30 divided by 360. Similarly, if you calculate interest for April, 1 lakh into 12 by 100 into 30 divided by 360. Means whatever may be the month for which you are calculating interest, the system will uniformly take 30 days for the month and 360 days for the year. Clear? Then you have the French calendar. Okay, let us see the list here. Japanese calendar, right? Japanese calendar. In the case of Japanese calendar, it uses 30 days as the basis for the month and 365 days as the basis for the year. That means with the same details, right? Japanese calendar. Here, you have to assume that January is the example for the month containing 31 days. February is the unique month, and April is the example for the month containing 30 days. It is not necessary to write all the 12 months, no? So, in the case of Japanese calendar, if you calculate interest for January, 1 lakh into 12 by 100 into 30 divided by 365. Whatever may be the month you are calculating interest, system will take 30 days only uniformly. But for the year, it takes 365 days. February, 1 lakh into 12 by 100 into 30 divided by 365. Similarly, April, 1 lakh into 12 by 100 into 30 divided by 365. Clear? Then French calendar. See here, 28 comma dot comma 31 divided by 360. That means if you take the French calendar, the system will consider actual number of days in a month as the basis for the month and 360 days as the basis for the year, right? That is what is written here. French calendar. It uses the actual number of days in a month as the basis for the month and 360 days as the basis for the year. So if you calculate interest for the month of January with the French calendar, January, 1 lakh into 12 by 100 into 31 divided by 360. Actual number of days in a month as the basis for the month, right? Then February, 1 lakh into 12 by 100 into 28 divided by 360. If it is the leap year, system automatically takes 29 days. Then April, 1 lakh into 12 by 100 into 30 divided by 360. Then fourth one is G calendar. G means Gregorian calendar. So again, it uses the actual number of days in a month as the basis for the month and 365 days as the basis for the year. So actually the calendar which we use in our normal daily life is also called Gregorian calendar, right? Actually that calendar was invented by John F. Gregory. On his name, it is called as Gregorian calendar. So if you are calculating interest for January, right? 1 lakh into 12 by 100 into 31 divided by 365. Similarly, February, 1 lakh into 12 by 100 into 28 divided by 365. Then April, 1 lakh into 12 by 100 into 30 divided by 365. So, right? So normally, so here I have taken Gregorian calendar. According to client requirement, we take the calendar. Okay. So
What
that
if
is
in leap year?
sorry?
In leap year, it will take also 365
29
days.
days. 29 days automatically.
Days, days of the year.
No, days only 365. That's it.
Okay.
Not 366. Now, define reference rate of interest. It is the identification for which we assign the real interest rate, that is 12%, 13%, etc. The reference rate of interest is assigned to the interest indicator. We can define any number of reference rates of interest. That means for every actual rate of interest you pay, we create one identification. That is called reference rate of interest. For this reference rate of interest only, we assign the actual rate of interest, right? So at this point of time, let us create this reference rate of interest. Then we will see how they are used further in the next steps. For example, you have taken 5 term loans. On 2 term loans, you are paying 12%. So for this 12%, we create one reference rate of interest. On another 2 term loans, you are paying 11%. For that 11%, you create another reference rate of interest. On 5th term loan, you are paying 10%. For that 10%, you create another reference rate of interest. Like that, for every actual rate of interest you pay to the bank, we create one identification that is called reference rate of interest, right? Continue.
Sir, these interest rates will be given by the bank at
Yeah.
the time of a loan.
Yes,
taking.
yes.
This
They are given to the bank only. Continue the paragraph. The reference rate of interest. The reference rates of interest are also called, are defined at client level. See, Bhavin, you cannot do the practice along with me in the class, right? You have to listen to the class and you have to do the practice only after the class. So when I'm trying to access the same transaction, you're also trying to access the same transaction. That's why you got that message that data is locked by user Lakshmi. So path is same as above. Means SPRO. Finance accounting new. General ledger accounting new. Business transactions. Bank account interest calculation. Define time dependent terms. Define reference rate of interest. Click on new entries. Reference rate of interest is equal to BD1. Long text is equal to 12% reference rate of interest. Description is also 12% reference interest rate. Date from 1/4/2022. Currency INR. Click on save. Let us assume that, right? We are using another rate of reference rate, another interest rate, right? So for that also, we have to create another reference interest rate, right? Do one thing. Some space is there now. Please write down. Click on next entry button. Click on next entry button. Reference interest rate is equal to BD2. Reference interest rate is equal to BD2. Long text is equal to 11% reference interest rate. Long text is equal to 11% reference interest rate. Description also 11% reference interest rate. Date from 1/4/2022. Currency INR. Click on save. So how this is used further, right? We will see later on in the next step.
So what is finance center here?
It is a functional area, right? It is relevant for finance accounting management, right? It's not relevant for FI.
Okay.
Sir, here we are giving 1/4/2022. In the middle of the year also.
You give the same name. Say, you can give the validity date as per the requirement. Suppose you are taking the term loan today, right? You give the 6/9/2022.
Okay, sir.
Table name, write down T056R. Table name T056R. Then define time dependent terms. This we will see in tomorrow's class. This step will take nearly half an hour. This we will see tomorrow. Any questions from anybody?
Yeah, Lakshmi sir, Ravi here.
Yeah,
So in this defined reference rate, we just mentioned, we just created an entry, we just defined an entry for 12% and 11%, that's all.
Yeah.
But we nowhere we mentioned it is the actual 11% and 12%.
Yeah, that is done in the next step. Enter interest values is there, no?
Okay.
It will come next, right? After time dependent terms, right? Enter interest values.
Sir, I have one question. Afzal. Hello.
Yeah, tell me, Afzal.
Yes, sir. In step first, we taking the interest ID BD. So, what are the basis we taking the interest ID? Is already given in a system, or
No,
we can?
no. You cannot take already given, right? You have to define
Right.
your own.
Okay, we can define our own. Yeah.
You have to.
Uh,
You have to define your own interest indicators.
Okay.
Hello.
Yeah, Manju.
Hello.
Yeah,
Sir, but
Tell me, Manju.
yeah. Sir, what in case interest rate got changed in middle of the month?
We
Because
can change
sometimes
it.
it happen. During
Yeah,
that
yeah.
time, do we?
We can change it. How to change, I will show you tomorrow.
Okay.
Where to
Okay.
change, how to change, I will show you tomorrow.
Okay, sir.
That point has not yet come.
Okay, sir. Thanks.
Sir, if I need
Hello?
some more clarification about this, so can I ask you write in an email, because I just need some more understanding of this topic. Yeah.
You can call me, right? Otherwise, you can ask me tomorrow, beginning of the class.
Okay. Okay. All right, sir. Right. Thank
Yeah.
you.
Do one thing tomorrow itself. You ask me before starting the class, right? I
Right,
will
sir.
explain your
Okay.
doubts, and again we will go to the subject.
Right, sir. Thank you.
Okay.
Sir, this is Joshna, sir.
Yeah, Joseph.
Sir, I have a request
No, I'm
posting
not able to
video,
hear.
posting the general entry.
Already sent them.
Okay. Thank you, sir.
Okay.
this is Bhairav, sir.
Yeah, Bhairav.
Sir, we are entering the exchange rate, so we don't need to assign to the company code, right?
Yes,
Okay.
because they are the client level tables.
Okay. Okay.
They are client level settings.
Okay.
Suppose, for example, you have 10 company codes, right, in India. In all the 10 company codes, today exchange rate is USD 82 rupees only. Na?
Yes. Yes.
That's why it is enough to enter only once.
Okay. Sir.
So when you do any client level setting, that is applicable to all the company codes defined for that client.
Yes.
Okay.
Yes. Yes. Thank you, sir.
Okay, then good night. See you tomorrow.